All right, hopefully that's better. Hopefully you guys can see this now. Let's see if it's working here. Okay, perfect. It's working. Now we'll move this back to where everything was. Okay, you guys can see. Can we hear everything now? Oh, I don't want this on. Can you guys hear me? I don't want the camera on. Can you guys hear me? Sweet. I don't want my camera on, but that's okay. All right, so I supposedly I was doing that before, and no one could see because of that. So we'll start again. So the topic of this was why I think the US30 is in for a big move down. You had the Fed today talk about raising interest rates, and just so everybody knows what those are, it's what the federal interest rate is what banks lend to banks, right? So basically, it's been at zero for a long time because they've wanted easy access to money, right? The Fed has wanted people to have easy access to money. So in order to do that, you make it really easy for people to borrow money. And the problem that's happened is now you have a bunch of money chasing after the same amount of supplies, right, or goods. So that's why inflation in the United States is really high right now, because we're not producing more products, but people have more money, so everything is going up, right? So the way that you take care of that is you raise the interest rates, you take some of the money out of the economy, and that way the supply and demand go more in line. Does everybody understand that? Does that make sense to everybody? So if you raise interest rates and you make it harder to borrow money and you take money out of the economy, that should start to lower inflation. Does that make sense to everybody? The problem is that unemployment is going to go up. But you've had massive, just let me know if that makes sense so I can know that you guys can hear me. You've had massive spikes in the US30 in the last couple of days, right? January 20th, it was all the way at 35,488, right? And now you've seen a massive correction and wild spikes in that, which tells me that there's something bigger on the horizon. And I don't think that I think the Fed waited too long in order to really start doing anything to affect this. And I don't know if they have the tools anymore really to stop this moving train. So I'm looking for sells on the US30. I sold it earlier this week, and I'm done for the week. I don't need to do any more. But I sold it up here, and then I sold it here. And I think I'm up 1,600, 1,800 points for the week, which is pretty cool. But I am obviously looking for more opportunities. And I think your next major support level would be down here at 33,997. And then if we go back further, then I think possibly 33,143 is also possible. Okay, and you guys can see this. I could care less about social media. I don't do this very much anymore. Hey, buddy, Brad, how you doing, man? It's been a long time. I could care less about social media anymore. I really could, guys. I've enjoyed not doing these, and actually have really enjoyed not being on social media as much. But if I'm posting all of this stuff on my Instagram, and this was what, a couple of days ago? This was 4 days ago. You can see the sell there at 34,792. And it'll get here in a second, guys. Hold on. It's a little bit slow, I guess. But you can see this sell at 34,792 down to 34,273. I had that sell, made really good money off of that. I've had a really killer week in the last week, 35,356 to 35,154. So I've been killing the US30. That was just one trade right there. That was a couple days ago, 343 points on the US30. So I believe wholeheartedly that this is going down. So those are just some of the trades I've taken lately. And I threw a picture of a fish in there for some reason. Here's another one from, how long ago was this? 6 days ago. Again, 35,472 to, I mean, there's been some really good selling going on. Okay, and I'm not doing that to brag. I'm just, I believe in what I'm saying on the US30. So I will be looking for sells. Now, the next area that we possibly could come down to is that 33,997 level. If we break below there, pull back, and get another sell opportunity right there at that line, then go down to the 33,143 area. Okay, I think that we're going down to at least those areas. If you go to a higher time frame chart, because you have to go to a higher time frame chart, if we get past that 33,143 level, look, this is now a weekly chart. Okay, that was pretty much the low for a long time. If we get past that 33,143 level, you have a lot of area right there, don't you? You have a lot of area right there. A lot of clean area down to 29,617. I am looking for at least this level here and possibly even down a little bit lower. I think we're in big trouble in the US. And the reason I believe that is because inflation is really bad. And if they're going to raise interest rates, it's going to make things, unemployment's going to go up. I think we're in the beginnings of a recession in the United States, which is really crazy because we should be growing after the pandemic, right? We should be getting a bunch of growth, but we're not, and the reason is because of the policies of this administration. So, but if we get past that 33,143 level, which I do believe we will get, we could seriously come down to 29,617. Okay, so that's a huge possibility. Now that doesn't mean we can't buy at specific levels here. If we get down to these levels, if we get down to this 33,997 level, it doesn't mean we can't buy if we get the right pattern. But the overall is looking for shorts and to continue to look for shorts. Okay, and that's the overall what we want to do. The US is in, I just believe it's in big trouble. So let's look at gold too real quick. Gold is coming down right now to a significant level at 1814. 1814 is a level on gold from January 13th, January this right there, and then a couple levels right here. So this 1814 level is a really significant level. So let's see how it reacts around that 1814 level. I'm looking for buys on gold. I believe still, and I've been saying this for a long time, I believe gold is going to go to all-time highs again. So I am looking to buy dips whenever possible. And the next possible area right here would be if this 1 hour candle closes with that tail at the bottom longer than the body of the candle, right? Tail at the bottom, like, we'll get rid of all this real quick. This would be a perfect example right there, that candle there, of the pattern that I'm looking for in order to buy gold. So let me just, it looks like it's a little bit slower than that, but I'm looking for that pattern to show up on the 1 hour chart. And once that pattern shows up in the 1 hour chart, I will be looking to buy gold anywhere around here. It doesn't necessarily need to go down to 1814, but if it can get that pattern right there with that tail longer than the body of the candle at the close of the 1 hour candle, so that would, again, only would be in 55 minutes. You wouldn't have it close right now, but you would have it in 55 minutes. If you get that pattern, I will definitely be looking to buy gold. It's just a no-brainer at that point because I know that I'm going to be right 85% of the time. And if I can be right 85% of the time, it should be a no-brainer, right? So if we get that pattern in the next 55 minutes, I will absolutely be buying it. Okay, so I will definitely be looking to buy that. Those are the plan. And if it goes down past 1814, then your next major area would be 1805, and 1805 is that support level from January 18th right there. Okay. So between 1814 and 1805, if it goes, we may not get that. We may not go that low. If it goes that low, that'd be fine. But if we get to 1814 and we get the pattern that I'm looking for, and again, that pattern is that tail longer than the body of the candle, right? If you're going to buy that tail longer than the body of the candle, like the one I'm going to circle again, if you get that, then I will definitely be looking to buy. And I will be looking to buy gold because I believe that gold is going to, and the picture quality is bad. I'm sorry about that, man. I guess you can go somewhere else if you need to. But I definitely think gold is going back to all-time highs. And when I mean all-time highs, I mean 2073. But I definitely believe we are going to get at least back to this 1850 area pretty soon. So anytime you can buy the dips on gold, I would be looking to buy the dips. But in order to do that, I have to have that pattern that I just circled right there that has a tail at the bottom of the body of the candle that's longer than the body of the candle with no wick on the top. Okay? It's really, really simple. The simplest way of trading. Simplest way of trading. It's 85% accurate. Any pair, any time frame. I don't care if you trade on the 15-minute chart. And we can go over it. I don't like going over it as much anymore. I really don't like being on YouTube at all because you get stupid people on here commenting like the person we have commenting right now who's a little bitch. And that's all I'm going to say about that. But if you look at this pattern and just the buy side, let's do the buy side for now. If you look at every time you have that pattern, and it has to have a tail longer than the body of the candle, with no wick at the top, and you look at every time you have that, and you just go over that. Just back test it. Don't take my word for it, because I'm a schmuck. I'm just a schmuck on the internet, right? No one should believe me. I don't care. I don't want you to. But if you go over that and you say every time that tail is longer than the body of the candle, and you buy at the opening of the next candle, you're going to be right 85% of the time. Okay? 85% of the time. So the question is, again, that I always ask the people is, if you know you're going to be right, Peter, right, 85% of the time, is should you take the trade? If you know you're going to be right 85% of the time, should you take the trade? It should be a no-brainer at that point, right? So you could go to the 15-minute chart. You could back test on the 15-minute chart. Every time that tail is longer, and if it's a sell, it's just the opposite, right? It's a wick at the top longer than the body, right? If it's a sell, it's just the opposite, right? This was a perfect, look at this one up here at the very top. If it's a sell, it's a wick at the top of the body of the candle longer than the body of the candle with no tail, right? So in order to sell it, you would just do the opposite. So on that, for instance, on that one that happened just the other day, or happened just earlier, maybe, you would have gotten in at the opening of the next candle at 1851, and you'd be down at 1814. Because that's the perfect sell candle right there. Perfect. Okay? So the sell is just the opposite. It's really simple. Really, really, really simple. That's all you need. And if you're going to line it with the trend, all right? If you're going to line it with the trend, then it makes it even better, right? If you can align that and say I'm only going to go with the trend, then you can make it, and it's even better. And I consider the higher time frame charts the 4-hour chart and above. So if I go to the 4-hour chart on gold and I circle, let me just see where, and I circle, let's just say right here. For these people that actually want to learn and aren't assholes. For the people that want to be assholes. I'm not going to kick you out. You say whatever the hell you want. I don't care. You want to be a dumbass, be a dumbass. Nobody cares. You're not relevant. Okay? So if I circle from where it is on the 4-hour chart to where it is now, it's an uptrend on the 4-hour chart. Just seeing where my circles are on here. So it's an uptrend on the 4-hour chart. Okay, I still believe that it's an uptrend. On the daily chart, the daily chart is a downtrend to me. Okay, the weekly chart, uptrend, monthly chart, uptrend. So 3 of the 4 higher time frame charts are an uptrend. So I'm looking for buys on the 1-hour time frame. Pretty easy. Pretty simple stuff, pretty easy stuff, easy trading, not complicated. And that's all you need. That literally is all you need. You can see I don't have no stupid indicators on my charts, no dumbass indicators, because you don't need them, because all indicators lag price, right? All indicators lag price. You're talking about MACD, you're talking about any of those stuff, you're talking about any of that stuff, they're all lagging indicators, which means they lag price, right? So by the time these moves happen, by the time an indicator tells you to buy the US30 when it's gone down here, it's already up in this area here. So the move has already happened if you're listening to indicators. That's why they're lagging indicators. That's why they're shitty. And that's why losing traders use them. And that's just the bottom line. So you need to learn how to, this is the 1 hour time frame. I take all of my trades, the enterprise, on the 1 hour time frame. So I can't take a trade unless the 1 hour time frame closes. So obviously where I live right now, it's 1:11 in the afternoon. So I can't take a trade for 49 more minutes. But if this candle on the US30 closes with a tail longer than the body of the candle, then I would take a buy, right? That pattern is 85% accurate no matter what time frame it's on, no matter what pair. Crypto, I don't care what pair it is, I don't care what time frame it's on, that pattern is 85% accurate. Here's a 15-minute chart. Yes, I can. Hold on. Let me get to the 15-minute chart. Let me just get to the 15-minute chart. And then I'm going to circle a buy. A buy candle is a candle that has a tail at the bottom that's longer than the body of the candle, right? Does that make sense? A tail at the bottom that's longer than the body. Now we're on the 15-minute chart. Okay? And I don't want it to have, if it's a buy, I don't want it to have a wick at the top. Does that make sense? Does that part make sense? I used to do live streams all the time. I hate YouTube. So I hate YouTube. I think YouTube's a bunch of communist bastards, like Canada is. Canada is a bunch of communist bastards too. But I hate YouTube because they're a bunch of free speech censoring bastards. So I don't like being on YouTube that much, to be honest with you. Okay, everybody see that though? That tail, that candle in the 15-minute chart that I circled is longer than the body, correct? Is that tail longer than the body of the candle on the candle I circled? And so you would enter at the opening of the next 15-minute candle, right? So your entry on this would have been at 33,752 right here, and you would have made really good money. You would have made really good money on that. Does that make sense though? Yeah, that is your free speech, and no one's censoring you from being able to make those comments. That is your free speech, like we said. You're free to comment whatever you want. No one gives a fuck. No one gives a fuck what you say, so you're irrelevant. So you notice how you're not being banned. You can say whatever you want. No one gives a fuck. You're irrelevant, man. Okay? So that is a buy candle. The buy candle is the tail at the bottom longer than the body of the candle with no wick at the top. A sell is the opposite, right? If you want to sell it, the sell candle is the opposite. It would be a wick at the top, and here's another one right here. A wick at the top longer than the body of the candle. And then you would enter the sell at the opening of the next 15-minute candle, which you would have entered at 34,393, and you would have made really good money there. Okay? Now, is it right every single time? Of course not. Of course not. It's not right 100% of the time. Anyone who tells you the system that they trade is 100% accurate, run away and hide from them, because it doesn't. There's nothing that's 100% accurate. Okay, this pattern is 85% accurate, no matter what time frame, no matter what pair. It doesn't matter. Okay, so that's a really good question. That's actually a really good question. So I always trade the US30 on a higher time frame chart, right? So my stop loss on the US30 is always 200 points to begin with. Okay, and I know people say that's a huge stop loss, and I can't believe you do that. But the US30 is the beast of all beasts, right? The US30 is the beast of all beasts, and you have to trade with a bigger stop loss, I believe, on the US30. But let's go back to this buy example down here at the bottom. Your entry would have been 33,752, and the bottom of that candle right there is at 33,539, right? Is everybody seeing that? You want your stop loss below the low of that tail, and you want it 40 or 50 points below the low of that tail. You don't want it right at the tail, because a lot of times these things will come right back down here, right, and then they'll go up. So if I got in there at 33,752, my stop loss has to be below the low of that tail, and I want it 40 or 50 points below the tail. Does that make sense? Does that make sense to everybody? I want it below the tail by 40 or 50 points. Now, once I get up 40 to 50 points, I always want to set my stop loss at break even. Always. Once you're in a winning trade, don't let winning trades become losing trades. So once you're up on this trade, you would have gotten in at 33,752, and you would have immediately gone up to that price right there at 34,118, which it would have been 360 points. If you're up 360 points on that trade, should you ever let that trade become a losing trade? If you're up 360 points on a trade, because that one that we're talking about right now went straight up 360 points, should that ever become a losing trade? Should that ever become a losing trade? No, right? At that point, you're up 360 pips. Your stop loss should be at like plus 150. You should say, my stop loss is at plus 150. I'm going to make money no matter what. But you should never, ever let it become a losing trade, ever. And then once I'm up plus 150, if it goes up higher, I just keep moving my stops up higher, right? And this one, you never would have gotten stopped out if your stop was at plus 50 or so. And then it comes down, does a little dance here, does a little dance, and then you get more opportunities in the next candles right there, right? You get more opportunities. These next candles here, hours later, you get another opportunity, you get another move up. Then there's another example of it right there, and you get another move up. Okay? And you come down here. These aren't ones because let's talk about these two candles right here, because this is important. These candles right here do have tails at the bottom that are longer than the body, but they also have wicks at the top. I don't want the candle to have both a wick and a tail. Does that make sense to everybody? If I'm buying it, I want it to have a tail at the bottom, longer than the body, and no wick at the top. I don't want it to have both. Okay, so this one down here, it's accurate, guys. I'm telling you, the 15-minute, the 30-minute, the 1 hour, if you want to trade it on the... Can I zoom in a bit? Yeah, absolutely. I can try and zoom in. See if that'll help you guys. See if that'll help. Does that help? Is that better? Maybe one less than that. Is that a little bit better? So I'm just going to wait. Again, when I do it, okay, perfect. That's better. Okay, so it works on the 15-minute chart. It works on the 1 hour chart. It works on the whatever chart you want to trade it on. I don't like trading. I'm not a scalper. Okay, I'm not a scalper. I'd rather get kicked in the balls than scalp. Okay, that's just me. That's my personality. I'm a swing trader. I like to get bigger moves. Now, because people always say, well, you have a 200-point, 300-point stop loss on the US30, but I'm also going for 400 to 600 points. So does it matter? Like if you have a 5-pip stop loss and you have a 10-pip take profit, that's a 2 to 1 or 1 to 2 risk reward, right? It's the same thing when you have a 200-point stop loss and you're going for 400 points, right? It's just deeper trading, correct? It doesn't matter if your stop loss is 200 points. It just means you have to go for 400 points. So it doesn't matter what it is. You just have to have your risk and money management in line with each other. Okay, so now you're seeing that gold is going up. And if gold were to close like this, on the 1 hour chart, you can see this 1 hour chart right now. If gold were to close with that pattern, that you see right now, because it has a tail longer than the body, I would absolutely buy gold. But I can't do it for 40 more minutes because the 1 hour candle doesn't close for 40 more minutes. Does that make sense to everybody? But if it closed like that, if it closed the way it's looking right now, I would absolutely buy gold, and my stop loss would be below the low of the tail. So I would be buying at 18.20, and my stop loss would have to be below 18.15. Okay, so my stop loss would probably be around 18.12 or so, because I don't want it right at the low of the tail. I want it a little bit below. Okay, and everyone's like, well, that's 50 pips. Who cares? Who cares? Just make, if you have to trade smaller lots, you trade smaller lots, right? It doesn't matter. You can make the risk the same. But I guarantee you, if you back test this, because I don't want you to take my word for it, I want you to back test it. Don't take my word for it. Back test it. That's the perfect candle. If it has a tail longer than the body of the candle, it's a buy. If it has a wick at the top longer than the body of the candle at the close of the 1 hour candle, it's a sell. And if you're going to line it with the trend, that's even better. But go back test it, right? Don't take my word for it. You don't know me. I don't know you. You don't know me from Adam. I've been doing this for 18 years for a living. 18 years. I do know what I'm talking about, but I don't want you to take my word for it. I want you to go and back test it. If you're going to become a full-time trader, I know that's what a lot of people aspire to do. A lot of what you do is back testing, and a lot of what you do is sitting on your ass waiting. Because people always say, oh, it must be so much fun to be a full-time trader. It must be so much fun. It's 90% boring. It's 90% boring. Okay? It really is. It's 90% boring. 10% excitement. So if you're going to become a full-time trader, this is part of your job, right? This is part of your job to back test. It's part of your job to do this. A couple hours. But what I do, Peter, is I set my trades and I let them go. I'm done for the week. I did my trading Monday and Tuesday, and I did really well, so I'm done. A tiny Armand van der Walt, you have to kind of determine that for yourself. I like to have it, obviously if it's no wick, that's obviously better. You have to determine that. I mean, that's nitpicking, right? But I like to have none, but if it has a tiny one, whatever, right? But I was done because I knew that the rate, news was coming out today, and the non-farm payroll, non-farm payroll isn't coming up yet, is it? No, non-farm payroll won't be this week. But I knew the rate announcement was coming out today. I didn't want to be in the markets today on Wednesday. So I did my trading between Monday and Sunday night and Tuesday, and I'm done for the week. I don't have to do a damn thing anymore. So, plus again, I talk about this all the time too. My bills every month, guys, I have a house that's paid for. I have no bills. I have no debt. I don't have to make a ton of money, right? I don't have to push myself. I don't have to do anything because I have no bills. Zero. I mean, my cost of living is almost nothing. So I don't have to push myself. But I'm comfortable with what I do. I'm comfortable with the amount of money I make. It allows me to travel whenever I want. I'm going back to Miami next week. I'm going to Alaska in April, and I'm going to Hawaii in March. He is still on his mission. He's doing great. He's doing great, man, and I'm proud of him. He's been out there for 8 months, and man, the growth that I see in him is amazing. So he's doing great. He's loving it, and I appreciate you asking, man. I really appreciate that. The smallest time frame I look for is 1 hour. The enterprise. I always do on 1 hour because I'm not a scalper. But like I said, you can do it on the 15-minute chart. It doesn't matter. You can do it on the 15-minute chart. You can do that pattern on any chart you want. You can do it on the 5-minute, the 15-minute. I don't really care what it is. And all I'm saying is back test it. Don't take my word for it. Okay? Back test it. So we did get past that 34,118 level. And we did come down past that. Now the next level on the US30 would be down here at this 33,752 level here. So on the US30, if I'm going to sell, if I want to sell the US30, I need to have it retrace back up to this level that it just broke. That previous support now becomes resistance, and I need it to pull back to there, and then give me that sell candle, right? Which would be a wick at the top longer than the body. Does that make sense? So in order to sell the US30 again, I would want it to pull back to 34,118, that previous support that now becomes resistance, right? And then I'd want it to give me a 1 hour candle close with that pattern, and then I could sell it again, and then my first target would be down at that next major support level at 33,752. Does that make sense to everybody? And then the next target, obviously, if it goes any further, is down in this area. Okay, but once you get up 40, 50 points, you need to set your stop losses at break even. And once it goes above that, you just move your stop losses to more profit. That's how I do it. And that's afforded me the ability to make really good money. Does that make sense to everybody? This is the 1 hour time frame. Like I said, most of my stuff is done on the 1 hour time frame. I don't look any lower than the 1 hour time frame. I, again, would rather get kicked in the balls than look at a 15-minute chart. It's just the way I was taught, the way I was trained by my training people that taught me how to trade the markets. I would rather get kicked in the balls than trade a 15-minute chart. To each their own. Whatever you want to do, it doesn't matter. But for me, I'd rather get kicked in the balls. I just think that there's too much noise in a 15-minute chart, right? I think it's just market noise. So I like to go to a higher time frame just to weed out the market noise and get a little bit better picture. It's like the analogy going into the forest, in the deep of the forest. You can't really span out and look at everything if you're in the deep of the forest, right? And the trees are 60 feet tall and you're in the middle of the forest. You can't really see the big picture. But if you span out, you can see the bigger picture. I like seeing the bigger picture. People make the 15-minute chart work again, like I said, and good on them. The 5-minute chart, like that gold chat room, but I don't do it. But there's no longer down wick on the downtrend. Are you talking about the US30 right now? And the bottom line again is we have to wait 33 minutes before we could take a trade anyway, right? Because it's 127 where I'm at right now. So we wouldn't be able to take another trade for 33 minutes anyway. It doesn't matter if it's a downtrend or an uptrend, Peter. You can do, if the pattern sets up, you can take the trade. It doesn't matter. It's going to be about the same winning percentage. The only difference I see most of the time is if you're trading against the trend, your expectations for what you expect should probably be a little bit less. Does that make sense? Like if I'm trading with the higher time frame trend and the 4 hour, the daily, the weekly, and the monthly are all saying buy, and I take a buy on the 1 hour, then my expectation is I could get a pretty big move, right? But if I'm selling, then my expectations are once I get up 40 or 50 points, I definitely want to set my stops at break even and I want to protect myself. Does that make sense? So if you're trading with the trend, that's usually when the bigger moves happen. But it doesn't mean you can't counter trend it. It just means your expectations might be a little bit less. Does that make sense? All right, guys. Is there any other questions? Like I said, I'm not on YouTube a lot anymore. I'm really not on social media very much anymore because I don't need to be. I make good money. I'm happy with what I'm doing. I get to do whatever I want whenever I want. And sometimes I get a wild hair. Hey, buddy, how you doing? Sometimes I get a wild hair and decide to go on YouTube and stream again. But most of the time I hate it. Because you get dumbass comments. So, anyways, any other questions? Why do you miss me? You shouldn't miss me. You shouldn't miss me. There's nothing to miss. I'm nothing special, man. I'm great, man. Yeah. What do you mean? What happened on the U.S.? I'm doing great, man. I took the family up to Yellowstone this last weekend. We stayed at a hotel and just sat in the hot tub and swam and went snowmobiling this last weekend. I'm heading to Miami on Monday, and then Hawaii in March, and then Alaska in April. I'm doing great. Doing just peachy. I don't like this keto diet that my wife and I are doing. I don't like that, but I'm doing it. I don't like this keto crap. but I'm doing it. The one thing I like about it is I can eat a bunch of meat. I do like that, but I don't like this keto diet. But we're doing it. The boss says do it, we do it. Because you love me? Oh, I don't know how I feel about that, to be honest with you. I mean, I appreciate that, but I don't know how I feel about that, to be honest. Some might consider that a little bit creepy. I don't consider it creepy, but some might consider it creepy. All right, so I'll be in the gold chat room, guys. You guys can we can chill in there, but I'm gonna end this debacle of a stream, and wishing everybody great success in their trading this week. I hope all of you guys have a wonderful trading week, and do really well. I'm hoping you all do really well. Anyways, you all have a good day. I'll be in that gold chat room if you guys want to chat.